You're watching The Big Picture on News.Markets. China's stock market was up 150% until June. Then it fell by nearly a third. Then it had the strongest two-day rise since the 2008 global financial crisis. Analysts say there's scope for it to rise or fall further. The roller coaster ride has spooked small investors and the Chinese government too, who did everything it could to halt the slide. Augustin Eden, research analyst at News.Markets, joins me now. Augustin, thanks for coming in. Now, what has the impact been of all these stock market shenanigans?
Well, a breakdown in sort of trust in the Chinese stock market, certainly. It's exposed the fact that it's relatively fledgling in comparison to the sort of nuts and bolts economy in China, and people are pretty nervous. There's a lack of institutional investors in the markets. It's mainly retail investors there, and let's face it, the measures that the Chinese have adopted to stem this bursting bubble have been draconian at best. You know, they're forcing people to do things.
But what do you think it says about the Chinese economy? That they need more Western expert insiders?
They do. They need to, you know, however against that idea they may be, the fact is that there's a lot more experience in the West. You know, you've got big institutions who, whether or not they've received good or bad press of late, you know, they're the big players and they need to be involved to bring some form of, number one, stability to the Chinese markets, because they're all over the place at the moment, and number two, just expertise and added competition even.
You talk about bringing stability into the market. That's what the Chinese government's been trying to do with all of their measures. Do you think that they've done enough to stabilise the situation?
Yes, in their own strange way, but at some point they'll have to lift these measures that they've imposed. They'll have to start letting people short sell again. They'll have to start letting shares trade. You know, don't forget that quite a proportion of the Shanghai Composite is still suspended from even trading. So this is a completely short-term solution, and they need to do more work to make it a longer-term one.
How short-term is it? I mean, when do you expect to see changes?
Well, it's very, very difficult to know because it's also artificial. But let's say the Shanghai Composite stabilises and confirms that stabilisation, and then starts to rise back up to the all-time highs that we saw a couple of months ago before it started tanking off. Okay, perhaps when it gets up there, perhaps they're going to take these measures away, and in my opinion, I think everyone's going to be so spooked, especially the people who are holding these shares that are suspended from trading. They're just going to get out, surely.
So what about investors who want to get in? How should they play it? Is this one to steer clear of and keep watching, or is it time to pile in?
Well, like many things, there are two sides to the argument. We've got our eyes on mining stocks at the moment because for the main reason that they're technically trading near historic, if not all-time lows. Glencore's an example that's currently trading at all-time lows. And the Chinese economy is a massively commodities-led one. It's like Australia. So listen, how much further can the miners fall? How much more of this crazy, insane turmoil can we have in the Chinese markets? I'd say keep an eye out for the miners.
So keep an eye on the markets amidst all this Confucius confusion.
Exactly, yeah.
Augustin
Two
Eden,
words.
News.Markets, it's been an absolute pleasure talking to you. Thank you.
You too, thanks very much.